market news now. The rand edged lower earlier today as investor focus remains on President Ramaphosa's imminent cabinet appointments under a new unity government. The rand traded at 17.99 against the dollar, 0.2% weaker than its previous close. Ramaphosa is expected to announce his cabinet in the coming days following consultations. The benchmark 10-year government bond yield was around 2.5 basis points down at around 9.7%. The dollar index, which measures the currency against six others, spiked 0.4% overnight, erasing declines for the week, following a second successive rate cut at the Swiss National Bank and hints from the Bank of England for a reduction in August. Looking at the markets, the all-share index is up 0.4%, led by the financials, which are up 1.1%. Resources in positive territory, up 0.5%. The rand is currently trading at 17.89 against the dollar, 19 rand 11 against the euro, and 22 rand 61 against the pound. To give us perspective on the markets and help us look back at the week that was, we are joined by James Turp. He's a fixed income portfolio manager at Sanlam Investments. James, thank you so much for your time. So it's been quite an interesting 2 weeks or so, and perhaps even leading up to the elections. But let's focus in on the currency for a bit. Talk to me about the moves we've seen in the currency leading into the election and what we're currently witnessing. And as you talk about that, we'll have two charts for the viewers to have a look at, the 10-day moves as well as the year-to-date.
Thanks for having me, Nastasha. It has been quite a week, quite a couple of weeks in all South African markets. I mean, the currency is now one of the top performing in the world year to date, and that's good news for an emerging market currency. But going into the elections, currency was about 6% weaker on the year. It's now 3% stronger against the dollar year to date. So as I say, one of the top performing ones, but most of that move happening in the last week or so. So it's been quite a week. Government bonds a lot stronger, currency a lot stronger, equities, property a star performer too over the last couple of weeks. So everything looking good from an asset market perspective here in South Africa.
So going into then elections, how were you and the team, framing or assessing the electoral risk? What were the discussions like?
So that's a brilliant question and a tricky one to answer with where the market has responded. But going into a binary event risk, you've got to manage your portfolios from a conservative risk management perspective. You can't go in necessarily gambling investors' money on a good outcome. It's preferable to go in with a risk-averse position and then add exposure once there's clarity. The worst thing for investment is uncertainty. And going into the election, if you look at the poll data, ANC above 45% was deemed to be a good result. It was defied expectations with a below sort of a 40% outcome, and that has resulted in what markets are cheering as the best outcome, making peace with it because of the way they have accepted the result and forming this government of national unity, which shows the potential for the economy and for good news going forward. So the point of the question is you really can't go in overexposed to something as risky as a big defining election as this one was.
All right, so let's take things stateside for a bit. Last week, there was quite a bit happening. We had US CPI, we had the Fed meeting, but I think what was more constructive for me was Chair Powell's conference with the journalists. Taking in all of that stuff that happened on that day, how are you deciphering the Fed's message right now?
So it's good you picked up on the governor's sort of Q&A, which is often where you get the most detail. And he wasn't committing to anything, was he? And I think this is some points we've seen from Fed speakers this week as well, regarding, for instance, their guidance for interest rates that they call a dot plot, which shows only one interest rate cut of 25 basis points this year, but that it's an average of the voting members' views. And that's not, they say, a fair reflection of where they think the economy is going. The market, on the other hand, is expecting 2 25 basis points cuts by December, so showing you how at odds the market is from this guidance. They're not showing too much. They're not committing to anything. The data economically is slowly weakening, but not sufficiently for them to guide for imminent cuts. So where we are at the moment is they're talking about July potentially, but there's nothing discounted for a July cut. It's pushed out to September with almost 80% chance of a cut coming then.
So when you look at the path forward for inflation, say the Fed and the South African environment, what's your take on it? And as you talk about that, we'll put up a chart on screen looking at the bond market activity.
So a big one for South African inflation. Our analysts here at Sanlam Investments have got it moving as low as 3.9% by October. Should that happen, should the currency remain strong, we know what a strong currency does for imported inflation, particularly for fuel, then I think we could be, it's going to be difficult not to be dovish in that sort of an environment, even if from then it is expected to move back up to 4.5. So the forecasts at the moment, before the strong rand, look quite good for inflation. Now you've got the strong rand that is going to start feeding through. I think that could put rate cuts on the table here in South Africa sooner than we had expected.
What's your sooner? Is it September or November?
Yeah, earlier this year we were talking July, weren't we? I would think September, certainly. That's what's being priced, though, in the market now. It's being priced for a cut in September. So the risk would be that it's even earlier. I'm not so sure. Remember, we're talking about a lower inflation target. We know the Reserve Bank is committed to getting inflation expectations lower. So I'd say July's too soon, but I'd agree. I think September certainly could be live.
With that said, then, is there a chance that the SAB would move before the Fed, or would the SAB wait for the Fed?
It's not like it hasn't happened before, Nastasia. The SAB has gotten ahead of the hiking cycle, ahead of the Fed, and there are cases where we've cut before the Fed. Now, we've seen, as you said, Swiss National Bank cutting rates this week. We know European Central Bank has cut rates as well. The UK is penciled in also for cuts imminently in the next couple of months. So it's not out of expectations for us to go ahead of them. We remember we've got much higher real interest rates, much higher nominal interest rates than they've got in the US. And our economy needs some help at the moment. And whereas the US economy is going quite strongly. So that's the contrast. That's the reason Europe and Switzerland have been cutting rates. And so I think it's idiosyncratic. It's about our economy at the moment. And if there's space to cut, we can do that.
As we wrap up, what's the most exciting part of the fixed income or bond market right now for you?
The most exciting thing has been a positive outcome from the elections. All of our portfolios that are exposed to interest rates have done well. That's the good news at the moment. Almost all investment portfolios will have had a great June. Bonds up 6% already. From here, it's going to be about calling that interest rate cut and watching what the bond yield curve does from here. We saw a switch auction yesterday where the National Treasury Exchange is long for short, and that was well received. But I think as soon as we start expecting interest rate cuts, as soon as that inflation moves towards 4%, I think we might see the shorter rates start doing even better than they've been doing. So I'm excited about that picture developing.
All right, James, thank you so much for your time. That is James Turp, who's a fixed income portfolio manager at Sanlam Investments.